I'm Charlotte McLeod with investingnews.com, and here today with me is Dr. Nomi Prins. She is a geopolitical macroeconomist, a best-selling author, and the founder of Prinsights Global. Thank you so much for being here. Great to have you.
Thank you so much.
So we are here at the Rules Symposium. We're a few days into the event, and of course you did a great talk yesterday. So we'll go into some of the themes that you went over there because I found it very interesting. One of your key points was that we're in a real asset uprising, which builds on last year's concept of the real asset Big Bang. So I wanted to ask, what factors have you seen pushing us forward into this next phase?
That's a great question. Thank you so much. So last year, real asset Big Bang, I think a lot of assets to sort of the forefront of the asset spectrum, real asset spectrum, like gold and silver, were becoming more prominent for investors. Still, I think there's many people that are underinvested, but it was just starting to get more sort of mainstream. What we have now is a lot more geopolitical and major power plays happening throughout the globe. They have been because of tariffs from the administration. They've been because of battles back and forth between China and the U.S., between other countries and so forth. But those are only kind of part of the uprising. The uprising actually means that real assets don't have value just for what they are in terms of price. They have value for their positioning in the geopolitical power battle. And that's more and more part of legislation, part of executive orders from the White House, part of government focus. It's all about how do we control the assets after they're out of the ground. And that's going to be where that uprising occurs. It's control. That's going to give a bid to the asset prices, but a much bigger bid over a longer period of time, because this is now serious for all governments.
It does feel increasingly serious. And of course, gold is part of this real asset uprising. You had described it as a monetary anchor that countries will need if they want to engage with other nations. So curious if you can expand on what you are talking about there and maybe implications for elements like the US dollar.
Yeah, so back in the day, until 1971, there was the gold standard, which basically meant that countries could give their gold to the United States, receive dollars at a certain level. I mean, that was the idea. So gold had that anchor value in terms of actual currency. Now what's happening and why central banks have been increasing their reserves in gold and will continue to do that is that it allows central banks to basically have a component of their reserves in gold that kind of acts as leverage, as collateral for engagement with their own state or private banks, as well as with other central banks and other state and private banks throughout the world, because gold is an objective resource. It's not printed. It's not controlled by geopolitics. It is an objective resource. So the more that you have it in a secure manner on reserve for a central bank, the more it funnels into the operations financially of your country. And what's happening globally is that there's more and more bilateral trade agreements going on across the world. That's going to continue, particularly with tariff volatility, but it's happening anyway. It's just accentuated because of that. And the more that gold is stockpiled or reserved by these countries, the more there is that collateral for engaging in these trades. I'm not saying you need gold to trade oil or have an oil agreement, but gold becomes that necessary anchor to how the monetary system evolves and how payment systems evolve.
I think there's so many interesting directions to go there. You know, earlier this year, we had all these conversations on Fort Knox and making sure that the gold is there. We've seen some concerns from countries overseas about their gold that they keep in the U.S. And just yesterday, after we listened to you, my coworker and I were talking about, we're from Canada. We don't have any gold reserves there. So that's a little bit concerning. So yeah, anything you would add there on how concerned maybe people like us should be about that?
Yeah, it's interesting because the whole Fort Knox thing and all the conspiracy theories about, well, the gold's not really there, it's not what it was. Well, you know, Trump's old Treasury Secretary in the former administration, Steve Mnuchin, actually physically went there. He was physically in Fort Knox. He physically ascertained the gold is there. It has not disappeared since 2017. Fort Knox is very, very, very secure. And security is an issue. So in terms of being concerned, you know, for not having your own gold mines or major gold mines. I mean, there are actually amazing gold deposits in Canada on the junior mining side. And I know those are going to continue to grow in some amazing Canadian gold companies. But in terms of also partnering with allies across the world and having gold or having gold in reserve, where that gold is in custody really matters. So you can have a central bank that's buying gold on their reserves, but their gold's physically located in a vault in another country, but in a neutral country, in a country where you're not going to have a major like geopolitical event or war or whatever else, which is why, for example, a lot of Asia and Asian central banks are putting their gold in Singapore, because the vaults in Singapore are very, very neutral. So Canada's quite neutral as well. So there's certainly opportunity on the Canadian side to have that, but also to ally with nations that have vaults or a gold supply.
Very, very fascinating to go into that. And so, of course, gold increasingly important. When you look at gold in this current cycle that we're in, do you have a price in mind that you're thinking it will get to? Do you even bother to think about it in price terms?
It's interesting because I think we had this conversation a year ago. Gold was trading around 2,400, and I said it will go to 3,000 by year end or year turn when the new administration comes in, and it did. We're up now, sort of foundationally around. We hit 3,500 rounds. Now we're at 3,300 ish. But that's been a very solid base for where I think gold will go next. And I think we're going to head. I don't predict a lot of prices. That's not really my thing. But I think we are going to get to a 4,000 level at year turn. So 25, 26. I think we're going to go to 5,000. And then I think after that, it really will depend on how quickly these resets, monetary anchors, and sort of reallocations of trade and having gold be part of payment systems actually happen. So there's definitely upside to gold in the near term, and definitely upside in the farther term. I'm really excited about the new role gold has, because it's not just inflation hedging, it's not just safe haven, it's not just about wealth, it's about geopolitical power and monetary anchoring. That's a huge new role that gold is stepping into. So I just think from a price perspective, it's just going to go higher.
Absolutely. And so that's what's going on with gold. Great overview there. I want to take a look at silver as well, which you did mention yesterday. So I know you have a positive outlook and it's getting some attention. The price has been going. When you look at silver, you mentioned yesterday the industrial side. It's also got its precious side. So when you look at the outlook for silver and trying to figure out what is going to happen there, how are you weighing those two sides?
And so silver is really interesting that way. It doesn't have that sort of tier one or the use of it as gold has for being in the financial system. It's not quite counted in the same caliber. So it doesn't have quite that shine. And that was one of the reasons I think silver was a bit depressed relative to the gold rise. But silver this year has outperformed gold. And I think it will continue to outperform gold for those reasons. It's still the safe haven, inflation side, monetary anchor, not for central banks, but in general for uncertainty hedging. But also it has that industrial use value. And even though there is concern, I mean, GDP in the U.S. was down 0.5% last quarter. It's considered to be dropping in a lot of countries. And so there's that concern, I think, dampened silver last year. But I think now, even if that's going to happen, industrial use value, so building infrastructure, building defense missiles, building national security, national energy priorities needs a lot of silver. And there just simply isn't enough supply out of the ground to meet the demand that's long-term demand above the ground. This has been a thing, but right now, because of these geopolitical forces and realignments, silver is going to, I think, jump more into that industrial role as well. And so I do think silver is going to continue to rise from here.
It definitely feels like that's how it's going to play out. And also on the industrial side, I've got to bring up copper. And this is maybe a little bit hot off the presses news, because yesterday we had Trump say, I believe he's finished his Section 232 investigation looking at 50% tariffs on copper. I don't know how official any of this is. It's a little bit hard to tell, but I wanted to get your take on what's happening there.
So initially, I mentioned the 232 investigation, which was launched a couple months ago. The first time ever, 232 was going to investigate copper as a strategic metal that's important for national security. This is the first time that copper's actually had that spot. Uranium has been there before. Copper hasn't been there. So that already put a little bit of a bid to copper in the last few months. And what that encouraged was a depletion of actual copper physical reserves at the LME, at the London Mercantile Exchange. So basically the copper that's there underlying the futures contracts was basically just all moved into physical reserve by China, by India, by these long-term players who are concerned that there could be tariffs on copper and there could be a real quick dearth of supply. And so a lot of supply was taken out of the market. Now you get this announcement by the 50% tariffs. Whether that happens or not, whether that's a negotiation tactic or not, it almost doesn't matter. The 232 investigation hasn't officially been completed, but I'm sure Trump is aware, or at least is involved with how that's going to look. So to me, what it means is when it does become official, regardless of where a tariff is, copper will be secured as a necessary asset to strategic defense. And that's going to give a global bid for copper.
Right. So when I talk to people about copper, I'm often hearing, or have not now, but previously I was hearing, yeah, it's a great story, but it is longer term. So is this then moving forward the copper story? Yeah.
Yeah, it is. And what's really interesting, I was in that camp. I think copper is a great story longer term. We know we need to electrify the world. We know other countries are electrifying their grids. We know we have a lot of work to do on ours. These are important issues for energy security as well as for defense security. This was always the case with copper. But this latest development, opening the 232 investigation, having a report come out at some point, not yet, and having Trump come in with sort of preempting that with a potential 50% or however it looks tariff, that's bumped up the timing.
Okay, good to go into that. And on the 232 note, you mentioned uranium. So years ago, uranium already had its Section 232 investigation. Now, more recently, we've seen the executive orders on nuclear power from the Trump camp. And I think that's really important to talk about. The price since we last spoke has been a little bit in the doldrums, although perking up now. Anything you would add on uranium? It just seems like more factors are stacking up in its favor, but we're kind of in a bit of a holding pattern at this time.
Yeah, I would say that, and yes, there's been a bit of a bump out of that holding pattern since Israel and the United States basically targeted or bombed Iranian nuclear or uranium enrichment capacity. And even though a lot of capacity does not come from Iran, it sort of gave a bump to the idea that okay, more uranium needs to be enriched more quickly outside of wherever it's being enriched now, mostly Russia and Kazakhstan, but the Iranian just action sort of created a little bit of a bump up for the price now. So we're up near or closer near to the 80s level. I think that's going to continue as well. I think between the old 232s, between all of the bipartisan support and legislation that we've had for uranium, now with this activity, just recently, and now with all the attention on critical elements and minerals and a stockpile and everything else, there is a lot of uranium focus. Also, an executive order that basically took the regulatory burden out of permitting and creating processing plants in the United States to make it be 180 days instead of like some stupid amount of time. That actually is going to help with us building the physical ability in the country to process and enrich uranium more so. That's going to require demand for uranium. That's going to move up the price.
Yeah, I really liked your comments yesterday on the processing side. I think it's important for uranium. It's important for others as well. And maybe this is a good way to get into the rare earth side. So anytime we have trade war concerns, these kinds of clashes, we have rare earths coming up because China's just so dominant in that sector. And I think that the Western world knows that. And I wanted to get your thoughts. Why is the West not moving a little bit more quickly to take away some of that China dominance?
I think the West has certainly been very behind the ball on that. And I do not know why they haven't moved more quickly in the past, because it's only been recently that this administration has talked about even having a critical minerals reserve, which includes the 17 rare earth elements, and has put forth an executive order to basically secure that. And the last administration also put more tariffs on permanent magnets, which are the main out product for magnets that come from rare earths. This one is continuing that. So there's more and more focus on the sort of government federal side across the world, and certainly in the United States, on rare earths. It's a big miss to allow any country, it happens to be China, but to allow any country to almost have 100% control over the permanent magnets, which basically are in everybody's cell phone. They're in every missile defense system. They're in everybody's car, whether if you have electric windows, whether you have an EV or not. All of us use rare earths all the time, and every single one of those rare earths is mostly processed in China. That is a problem for any country. Why it took so long to have this awareness is just a dramatic inefficiency in what our government has been focused on. But I think there's an increasing awareness that something needs to be done, and something needs to be done fast. And one of the reasons I'm on the board, or decided to be on the board of a rare earths company, Meteoric Resources, where we have a big asset in Brazil, is because the U.S. government, actually, while it's talking about tariffs on the outside, actually signed an agreement with Brazil to protect its critical minerals as well as its rare earths for Western allied purposes. This is changing very rapidly.
And I know we talked about this a little bit last year, but I think investors, maybe part of the reason that investors are hesitant to get into rare earths is it's a little bit complicated. So you have obviously chosen where you want to be behind. For people who are looking at rare earths companies, what advice would you give them?
That's a really great question. It is still a speculative part of the commodity curve. So the advice I would say is that if you're going to be investing in the rare earth space, do your homework, understand a little bit more about where they're used, where they come from, how they're processed, have a long-term view. But I think if you have a long-term view and realize there's going to be some volatility in geopolitics along the way, they're an incredibly good spot to put 1%, 0.5% of your investment portfolio as a starter.
Okay. I know I've got to get you back out onto the show floor here at the Rose Symposium, but I was going to close by maybe giving some idea for investors of how to approach these different sectors. So we've gone over a number of commodities that have real potential right now. And yesterday when you were talking, you said your portfolio, the Prinsights portfolio, are 30 to 60% weighted toward real assets in mining companies. And I wanted to bring that up because it's quite significant to show what you're doing with your money. So any thoughts you would share there?
Yeah, so one of the reasons we are overweighted, both in commodities and also companies that utilize them in a good way. So energy companies, utility companies, they're international, as well as the commodity mining companies themselves, is about 60% of what we recommend. And the reason for, and it's outperformed the S&P this year, the reason for that is because of this real asset uprising. There can be a lot of money that gets thrown out in speculative movement around things like NVIDIA, which has underperformed gold and silver this particular year to date, and other companies like that, and that's fine. But for us, focusing on what's real, what has a long tail of the geopolitical story, of an economic needs story, of a security needs story, where real assets are the anchor to all of that, as well as monetary story, those things have long-term value. So that's where we start from, and that's basically how we position going forward.
Well, I think that's a perfect way to wrap it up. Thank you so much for coming on to go over just a whirlwind trip through all of these different assets. This was great.
Thank you so much.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Dr. Nomi Prins.